Hello and welcome to your Daily 5 for the 1st of July. My name is Julius de Kempenaer and I'm talking to you from Amsterdam, the Netherlands. For those of you who don't know me, I'm a senior analyst with StockCharts.com and the creator of relative rotation graphs, or RRGs as they are commonly referred to. You can find my contributions in the RRG blog on the site, so please subscribe when you would like to be kept in the loop on everything that has to do with sector or more broadly asset and stock rotation and relative strength. Every Tuesday I host a sector spotlight show from 10:30 to 11 a.m. Eastern. Please tune in or watch the replays on the StockCharts YouTube channel. Every Thursday I write an article in the Don't Ignore This Chart blog, as well as an article in the Chart Watchers newsletter every other week. If you like this or any of my other videos or articles, please give them a thumbs up, and if you have any questions or remarks, by all means put them in the comments or send me an email. I love a good discussion and I'm happy to help you with any questions that you may have. Okay, related to investing and technical analysis, that is. Let's start with some charts. It's no surprise that my starting point will be a relative rotation graph, and the one that we're looking at right here is the RRG for US sectors. And be aware that it is a daily RRG, so we're looking at relatively short-term rotations. The first thing that I want to tell you about this chart is that there are only 3 sectors where the tails move from left to right, which means that they're gaining on the RS ratio scale. That means that the market is now holding up on a very narrow base. It's pretty much 3 sectors, healthcare, staples and technology, that are providing the upside for the market as it is right now. On this chart there are 2 tails that I want to focus on. The first one is the healthcare sector, which is nicely improving and gaining on both axes. And the second one is the communication services sector, XLC, which you can see has rotated from leading straight back into the lagging quadrant. And if we zoom in on those with a little bit longer term tails, we can see a little bit more detail. And you can see that communication services was at a very nice rotation, but over the last 4 or 5 days lost both relative strength and relative momentum and rotated back into the lagging quadrant. So for now I'm going to take healthcare, I'm going to approach healthcare from a positive point of view and communication services from a negative point of view. What I then did is I ran 2 RRGs, one with the individual members of the healthcare sector and the other one with the individual members of the communication services sector. And I picked 2 individual stocks from each sector. And here they are added to this RRG. For the healthcare sector, it's ILMN, which is Illumina, and ALGN, which is Align Technology. And in the communication services sector, 2 very well-known names, and it's Facebook and Twitter. And if we zoom in on the healthcare sector, then we can see that both Align and Illumina are at the right of the sector index, which is right here. So the center of the chart is the S&P 500. Both individual stocks are ahead of their sector, so they're outperforming the sector, or at least they are in a relative uptrend versus the sector, but they are also in a relative uptrend versus the S&P 500. So I call this a double benchmark RRG, and both stocks are beating both benchmarks, which makes them interesting to watch from a positive point of view. If we then move to the communication services sector, there's a completely different picture where the sector index is rotating at a negative RRG heading, which means between 180 and 270 degrees in a southwestern direction. And you see that Facebook has turned around and is now almost overtaking the sector, and you see that Twitter with a very long fat tail is moving ahead into the lagging quadrant. So these stocks we're going to approach from a negative point of view. If we go to the individuals, then starting with Illumina, we see that this stock started the year pretty weak. Even before the corona crisis hit, it was already in a downtrend, both on a relative and a price chart. And then when we dipped, it started to accelerate, and you can see the improvement in relative strength as well as in price. We already crossed above the highest level of the year, and we're now bouncing against 370, just above 370, which is an important resistance level. But we're still having higher lows, and we only need another break above this resistance level to add new fuel to that rally, and that will also help the relative strength to improve. So I'm going to wait for Illumina to break 370 as a buying signal, and it's already in a relative uptrend, so if you want to look for outperformance, Illumina is definitely one of the names that you should pay attention to. The second one in the of course that is a good one. Now the second stock in the healthcare sector is Align Technology. We see here is also a stock that started out at a relatively weak basis at the start of the year, both relative and price, but that rapidly changed after the low in March, and we see a very nice healthy trend emerging both on the relative and the price chart, and we have just touched the lower boundary of that channel, and we're coming out of that little correction, which I think is a positive sign. I'm watching for 290, 300 to break, and that will definitely also move the stock above its resistance in relative strength. The RS ratio very likely then put in a new low above the 100 level, and Align powering further into the leading quadrant. So this is your second stock in the healthcare sector to watch from a positive point of view. On the other side, we have Facebook, which has, I think, completed a double top. We're recovering now, so this resistance area around 225 should now hold as resistance, and I expect a new high to be put in place, maybe a little bit higher but not much, and then for the stock price to move lower. And you see that in relative strength already a new lower high is in place, and if we break below this low here, these lows here, then the acceleration in relative strength is very, very likely. And you see that the RRG lines have already turned around simultaneously. They're now both below 100 and traveling down at the same rate, which pushes Facebook further into the lagging quadrant, both versus XLC and the S&P 500. And then finally, that's a one for the negative. And then finally there is Twitter. That's probably the worst stock in that sector at the moment. You see that it broke below that very nice trend channel that we saw, but we bounced off that trend line. That is now definitely broken, and that also goes for the trend in relative strength that has been broken, and both RRG lines are now pushing below 100, pushing Twitter further into the lagging quadrant, making it a stock that is better avoided in the communication services sector. So both for Facebook and Twitter, very limited upside potential and pretty serious downside risk, while Illumina and Align have limited downside risk and significant upside potential, which makes them two stocks to square against each other from the long and the short side. And that concludes your Daily 5. Thank you for watching. I hope you enjoyed the presentation, and if you did, you know what to do. For now, stay healthy and be careful with your investments, and I hope to see you soon.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.